Hello everyone, it's Warren Peacock here again for WorkSmart Academy. Welcome to lesson number 5. So remembering that candles are generally triggers for trade entries or exits. And when it comes to these technical tools such as a support, resistance and reversal areas, we can use candles to confirm that idea. Today we're looking at technical charting, and then in lesson 6 we will cover building your trading arsenal. So let's start out with support and resistance. It's probably the most important concept in technical charting. It can be horizontal or diagonal. Personally, I prefer horizontal support and resistance. I'm not a great believer in diagonal, but I do know traders that will trade off diagonal support and resistance. So your own personal belief system does come into this quite a bit. I'm going to show you the principles of each type of setup. All right, so here's an example of some breakouts. So a breakout happens when support or resistance give way. In other words, one side of the market, either the buyers or the sellers, capitulate. In this example here, we've got the sellers coming in at those 2 points. We extend the line into the future, and here the sellers disappear. And the buyers are then in control, and the market moves through that level. It must close at minimum of 3 periods above the resistance level to confirm the breakout. When it comes to actual real-time trading, I might only wait for one time frame or for one period candle to close above. You look at a chart. First thing to do is practice these higher highs. So here the higher highs, higher low concept, and then go look at downtrending charts and look at the lower highs and the lower lows, and then you can start looking for trend lines. Have that distance on the breakout, and we can see price moved lower, and we can see a reversal candle pattern there. That would certainly be a confirmation to take profit if you didn't operate on a target-based system. Let's run through that one more time. Here we have a neckline that slopes upwards. We have a left shoulder, a right shoulder, and a head. The market closes below the neckline and reaches its target. That was a decent trade. Double tops. These are really straightforward and can be thought of as capital M, so as M patterns. We have a high over there, we have an equal high over there. If I drew in a nice horizontal line, those prices should be plus or minus equal. Example, it's a weekly chart. Okay, notice that it is a weekly chart. So in price, that is a very decent move. You would have been quite happy to take your profit on the target from the double top to neckline, and just extend that lower, and you would have been quite happy with that trade. If you have any questions, guys, I hope you've popped them into the questions section. I'm going to have a look at those now, and for lesson number 6, and we will be covering building your trading arsenal. So that is going to cover a playbook of strategies. We're going to look at types of momentum, trend following, breakout trades, and reversal type trades. We're going to build a strategy. We're going to show you an example of a strategy, and then we're going to show you when to exit a winning trade. Thank you very much. I hope you enjoyed that lesson.